Good morning, everyone. Thank you so much for being here today. A few apologies from the TVDM team. Zelinda, Nicole, Nell, and Kyle will be unable to join us today, but they do send their apologies. We thank everyone for taking the time to tune in, and we really hope you enjoy the session. Please note that this webinar is being recorded and will later be published on our website and YouTube channel. If you've not already done so, please sign up to our newsletter to stay connected with the TVDM Consultants team. We'll keep up to date with our latest webinars, events, legal updates, blogs, and vlogs. If you are new to our neighborhood, please feel free to stay around after the session and explore the platform. Please post any questions that you have in our forums. We look forward to connecting with you. A few upcoming events to mention. Zelinda van der Merwe will be participating as a panelist later today at the Reside conference at the Sandton Convention Center. She will be discussing the evolving tenant-landlord relationship, legal changes, and disputes and technology. If you are in Bloemfontein on Saturday, 30 May, join Nicole Null at our upcoming NAMA event, where she will be speaking on roles and responsibilities of trustees and managing agents. Our next Our Neighborhood live discussion will take place on Friday, 29 May at 9 a.m. Please note that this session is exclusive to paid members. And an important reminder, your scheme's PIA manual, or PIA report rather, is due by the 30th of June 2026. So please reach out to us if your scheme needs assistance. So once again, thank you for joining us today, and we will post all the relevant links to the chat shortly. We have two very wonderful speakers joining us today, and we will be hearing from them shortly. So first, our co-host is Mike Addison, the founding director of Addsure, a well-known insurance brokerage specializing in community schemes insurance. With over 30 years in the industry, Addsure today provides insurance advice and guidance to between 1% and 2% of sectional title schemes across South Africa. Mike started his career in banking, finance, and insurance. His experience and qualifications in property risk, finance, and management laid the foundation for establishing Addsure in 1995. Since then, he and the Addsure team have remained committed to hands-on, practical approaches, offering clients personalized, attentive service in all matters relating to scheme insurance. Under Mike's leadership, Addsure combines specialist advice with personal service while embracing technology to improve delivery and client experience. This balance between innovation and trusted personal support remains central to Adssure's reputation in the community sector. Secondly, our co-host is Tony Dellas, who has spent 27 years in the international banking and specialized in retail, treasury, and corporate finance. This extensive background provides the foundation for his second career in the community scheme sector. In 1989, Tony bought his first sectional title unit and served as trustee and chairman of the scheme. In 2003, he launched his management business, initially as a side hustle, out of frustration with constant changes in portfolio managers. By 2007, he resigned from banking to run his own management company full-time. He holds an MPRE NFQ5 qualification, staying ahead of industry standards. Tony is fueled by the constant evolution of the industry, from the shifting regulations to the unique daily challenges of scheme management. He remains passionate about navigating the ever-changing dynamics of the field. So wonderful. We can't wait to hear from both of you. And as we're all aware, May 2026 has proven to be an incredibly challenging month on record for community schemes. So we saw the start of it in the Garden Route at the beginning of the month, where schools were forced to shut down, and the N2 ended up being cut off by rising waters. And then later on, Cape Town bore the brunt of the most recent storms, and the conditions in the Garden Route that we saw earlier in the month became a reality for us closer at home. So whether it's a river overflowing in Plett or a saturated roof leaking in a luxury penthouse apartment in the City Bowl, the insurance questions remain largely the same. Who pays, what is covered, and why is resultant damage the phrase that is about to dominate everyone's lives for the coming months? Well, here's the point. Body corporates across the region are about to be flooded, no pun intended, with insurance claims, water damage claims, and disputes about what is covered. Repudiation notices, cancellation, resultant damage arguments that will tie up managing agents, trustees, and owners for the months to come. This webinar isn't meant to be academic. It's about what is truly happening in people's homes right now. So let's take a step back. Most body corporates that we speak to understand that they need insurance. What trustees often don't understand is how much they actually need, what they need of it, and what it covers, and what happens when a claim lands on their desk. The starting point is to understand what insurance a scheme actually needs. So the Sectional Title Schemes Management Act is clear. A body corporate must insure the common property and the building itself. That's not optional. But here's where it gets tricky. Where the damage happens, especially water damage, the question of who pays and what the insurance actually covers becomes a bit of a minefield. So let's talk about resultant damage, because it's central to almost all disputes that we see. Resultant damage is the secondary damage that flows from the initial insured event. A pipe burst, that's insurance. That's an insured event. Where water floods out and damage happens to electrical wiring, plaster, carpets, furniture, that's the resultant damage. A body corporate's insurance typically covers the burst pipe itself. The owner's contents insurance will cover the furniture and other belongings, but the damage to the building fabric, the plaster, the electrical wiring, built into the section, that's a bit of a gray area that tends to ignite a lot of disputes. But why? Well, the law says that the body corporate has to maintain the building in good condition. If a pipe bursts because the body corporate failed to maintain it, then the resultant damage may fall on the body corporate. If it bursts because the owner modified the plumbing or didn't maintain their section, it may fall on the owner. The insurance contracts are written around these divisions of responsibility. When the division isn't clear, insurers can repudiate. This is where maintenance becomes critical. A leaking roof isn't just a maintenance issue, it's an insurance issue. If the roof is worn and torn and the body corporate knew about it and didn't do anything, and then water damages the section, the insurer might say, well, you failed to maintain on your statutory obligation and your claim is repudiated. The same with burst pipes. If the pipework is old and corroded and the body corporate should have replaced it, then repudiation is back on the table. The other thing that owners often misunderstand is what their personal contents insurance covers. They may think, well, I have insurance for water damage, but sometimes you do, sometimes it doesn't cover it. Accidental damage is often excluded or limited. And even when it covers water damage to the owner's belongings, it doesn't necessarily cover damage to the building fabric. That's where the body corporate's responsibility comes in. If the body corporate's claim is repudiated because of a maintenance failure, the owner's insurer may say, well, that's not accidental, that's a maintenance issue, so we're not paying either. So the first essential is to understand the division of responsibility. A body corporate insures the building. The owner insures the contents and their personal liability. But the overlap, the building fabric within each section, the maintenance obligations that trigger repudiation, that's where disputes tend to happen. The second essential is that insurance is only as good as compliance with the policy conditions. Most policies have conditions. You maintain your property, you fix known defects within a certain time frame, you notify insurers of claims promptly, and you don't take unreasonable risks. If the body corporate breaches these conditions, if they ignore a known leaking roof, or delay reporting a claim, or fail to maintain the common property, the insurer can repudiate or even cancel the entire policy. But the overarching point is this. Insurance in a community scheme isn't about buying a policy. It's about understanding what you are insuring, who's responsible for what, and what happens when damage occurs. How much maintenance and compliance directly affects whether you get paid or whether your claim gets repudiated. So That's the foundation, and that's what we're here to clarify today. So now I'll be handing over to Mike Addison, who's going to take us through water damage claims in practice. He'll cover burst pipes, leaking worn and torn pipes, roof leaks, and balcony damage, the real scheme scenarios that we face every day. He'll show you how these claims play out and what gets covered and what gets disputed, and why resultant damage is the sticking point in almost every single one. After that, Tony Dellas will join us to talk about compliance and maintenance from a managing agent's perspective. He will show us how regulatory compliance directly prevents repudiation and how maintenance failures don't just damage buildings, they damage the scheme's insurance protection itself. And in some cases, they can trigger policy cancellation. After both presentations, we'll open up for questions. So please hold all your questions for then, and we'll do our best to work through them at the end. All right, Mike, I'll hand over to you.
And why? So what will normally happen is the person who caused the damage, in other words, they were the negligent party, would end up paying. Okay, but the owners below would need to find that person negligent normally. Okay, in a good cooperative bunch, as is here, Matilda says, look, clearly I'm the person that was erroneous, or it was my mishap. Obviously you can pin it on me. And she accepts the excess from, or repays the excess to the other members. Okay, but that's in the nice scenario where all three of them can sit around a table. In this block, triple news, they all get along unusually. Okay. Right, so Hannah is now presenting our insurance guide, which many of you are familiar with. It's been around for many, many years. In fact, 21 years. 1995 was when the first edition came out. And we've always had a page dedicated to burst pipes versus slow leaks damp over time. We have found this to be one of the most useful pages out because, and we've purposely compressed it off one page so that you can share it with owners when necessary. The idea is that we've broken down the issue of leaking versus burst pipes into the three scenarios, or the three boxes. Okay, you can download this booklet quite easily. You can just go to Google and type Addsure booklet and it'll come up, by the way, but I'm going to give you the link at the end and you can download a copy. There are a few hard copies still available, but I think these days everybody likes to have a soft copy, and you can share it on your websites or with your owners. Okay, but when you've got your burst and leak pipe scenario, you can refer people to this page, and here's how. Okay, and here's the three scenarios. So, and it speaks to what Sarah was saying in the beginning, the difference between, a wear and tear, or some people call it a maintenance issue, and then a burst pipe. And the same would apply for leaking roofs and so on, but let's stay with the pipes. So scenario one is your burst pipe. And a burst pipe, we can go drill down deeper into the definitions, but a burst pipe is basically a sudden and unforeseen bursting of the pipe. It's a perfectly good pipe, but the pressure was there and we had a burst pipe. Okay, so very typically it would look something like this. This is your kind of perfect example. It happened, especially where we are. Sometimes the temperature can get below freezing, and then the pipes can freeze up, and the expansion of the ice, especially when it starts melting, then the water starts gushing out, and we have a scenario where a pipe is burst and there's water everywhere. Typically covered, it also water pressure on the weak points. As long as the pipe wasn't worn and torn, the insurance will pay for the repair of the pipe, replacing the pipe, putting the wall back it was, give you tiles in that area where the tiles were damaged and replaced. Everything, less the excess. Your second scenario, so that is an insurance claim, a burst pipe. The second scenario, and this is where all the fights start, some of them end, but certainly start, is when the pipe bursts. Okay, and I'm going to say burst with a tongue in cheek here because they don't really burst. When it's a wear and tear issue, we call it a leaking pipe. Okay, so the pipe didn't suddenly burst. The owner, and the typical scenarios are smell something in the kitchen cupboards, or open the kitchen cupboards and you see mold at the back of the kitchen cupboard, or there's a wall, remove the couch and there's a big damp patch and there's mold and mushrooms almost growing up the wall you didn't notice, or your tenant didn't notice. That's more typical. And when the plumber comes around and opens it up, they find a pinholed pipe, a worn and torn pipe, old, rusty, pinholed. If it's one of the galvanized steel pipes, we've got lots of examples. That could also have rusted through. And it's leaking slowly because it's slowly deteriorating. As it deteriorates, more moisture is finding its way through. Now, when that pipe comes out and it's found, that is not a clam. It's a wear and tear, normal wear and tear issue. Note, I'm not using the word maintenance. Wear and tear. Wear and tear is not covered. Okay, always, never has been, and isn't. And when I'm saying it's not covered, I'm talking about the typical policies we work with. I always put in that caveat because there might be a policy that will pay for a limited amount of wear and tear. Some of them do try and bring out these things, and then they very quickly learn that it's a bad idea and they take away the product. So I say that because sometimes some of the insurers do entertain a little bit of this. But for the most part, a wear and tear issue, something that's happening over time, the word damp is excluded from cover in its entirety. No cigar. Okay, so that's quite easy, scenarios 1 and 2. Your third scenario, and this is where there could be a gray area and where it gets a bit tricky sometimes, but I do still pack it in a box to make it easier. By putting things in boxes, then things are easier to explain to owners. So I say to owners, look, what actually happened? No, last night I went to bed, and this actually happened. Candace, you'll know, in a building down the road from us here. So what happened was there was first of all, the claim went in, plumber's report came out. No, it was a worn and torn pipe, pinholes. Insurance declined the matter. Then what happened? She said, but no, phoned me up and said, but it happened suddenly. I mean, surely it's a clam. And I said, oh, did it? What happened? And she said, no, she was sleeping and then she was woken up by water, not just dripping on her, but a lot of water dropping on her. And then I looked at it a bit deeper, and sure as nuts, it was scenario 3. So what happened was it was a worn and torn fraught old pipe, but it had suddenly collapsed in the middle of the night, probably when the pressure was up because nobody's using water in the area. Water pressure goes up and the weak part is hammered, and there was a sudden release of water. So what the insurance companies that we work with generally say is, you know what, we're not going to pay for the repair of the old fraught wear and tear pipe. That's a wear and tear issue. Okay. Even the pipe itself, you pay for that. You pay for the breaking open the wall to get to it, fixing it, putting it back. All of that is a wear and tear normal issue. However, the gush of water that caused, as Sarah nicely explained, the resulting damage to your cupboards or to your flooring, that would be covered under this scenario because that part happened suddenly. Okay, so that's the difference. So under that scenario, you then split the costs out between what was wear and tear and what was sudden and unforeseen resulting damage. So that's why it is quite important that you do understand the difference. Right. So those are the 3 scenarios. 1, burst pipe, 100% covered. 2, wear and tear, 100% not an insurance claim. 3, a little bit of a mix between the two. that's where an insurance broker can do a little bit of his job or her job and help determine which part is claimable and which part isn't. And we can help the client at least get a portion of the claim paid. Okay, now, where can you find all of this information to share with your client? I refer back to that booklet and also another booklet, which is very popular among owners. And this is only available in PDF format. A client actually asked me, he actually was a trustee, and he said, Mike, what we need for our owners is a very simple, general, what is covered and what isn't covered. Give us a list of things that are generally covered and a list of things that are not covered. So we as trustees can tell owners, look, that's not an insurance claim. We're not insurance brokers, but look in the booklet. It's on the red dot. It's not a claim. And I think that over the past couple of years that we've had this out has been pretty helpful. It takes stress away from managing agents and trustees because, you can say, look, it's here, here it's generally, we can try and claim for you, but just understand, don't have that expectation. The common argument is, yeah, but I pay my levies. That's the common one. We all know that one. I pay my levies. Come on, you must pay my claim. Or I pay my insurance premium. So why aren't you now when I want to claim, I can't? Well, it's a contract, and the contract says that we will pay under these circumstances and we won't pay under those. Maintaining, the other argument is, how can I maintain a pipe in the wall? Well, that's why I avoid the word maintain. It's not about maintaining a pipe in the wall, nor can the insurance company. It's about wear and tear. Okay, I'm not going to labor that point. My time is running a bit thin. What I am going to finish off with is just pointing you to a handout, and it's also going to be downloadable here, which is very handy. Bruce Gibson, whose picture is there, very handsome man, in our Cape Town office. He's our general manager, and he
Oh,
heads up our
hi,
claims. Bruce, are you here?
Business Household.
Uh, so, what Bruce very wisely did a few years ago was put together a information handout for clients to show what is a claim and what isn't a claim by definition. And I'm not going to go in because we can do probably a whole half an hour just on this, but in summary, it just summarizes also in the brochure of what this is a cut and paste out of there of what a building insurance can be best summarized as. Okay, this slide will be available as well, but even this brochure is available as a resource for you to help with your claims dealings. Okay, what I am going to ask you to do, and I don't know how we're going to do this because I had planned, I have got a lucky draw uh, exclusive books uh, voucher here because nobody at TVDM, Nicole, has yet started writing a book, or have they started writing a book like some of the other experts? But seeing you don't have a book that I can give away, I'm going to have to go to exclusive books for the time being until your book comes out. So the idea this morning is if you have, and I'm actually going to give away two. How's that? Two. So there's two 500 vouchers, two books, in other words, unless you can buy cheap books and you can get more books for your $500. Um, but the idea is that you support us. Both TVDM and Addsure are nearly on 250 subscribers to our YouTube channels. And we actually want people that are interested in sectional title there. We don't want every time, we could easily go and get thousands of subscribers, but we want people who are interested in watching what we have to say, like this morning. So please subscribe. And the first two people that in the chat confirm that they are subscribed. My name is Joe Blogs, and I'm subscribed. Or if you haven't subscribed yet, quickly go and subscribe on your phone, or promise that you will straight after the webinar, and subscribe on Addsure and TVDM's YouTube channels. And if you're the first two people to confirm that in the chat, I will send these to you. And but I do need to obviously know who you are. Joe Blogs and then joe@gmail.com or whatever the case might be. Then I can get this to you and communicate with you.
Mike, your
Okay.
words aren't even cold yet, and you've got two two takers there,
Okay.
Trudy and Sue.
Okay. Can you get detail? Can we get your contact details? Because we know a few Trudys and a few Sues, and we want to get the right ones. Okay. Nicole, can I leave that with you to get to gather that info? Thank you. Okay. And then lastly, the link to the resources that I mentioned. So www.atonx.info. I'll put it in the chat as well, /TVDM. That's this morning's slides from my side as well. Tony, over to you, I think.
Yeah, thank you. Good morning, everybody. I really just want to draw on what Mike and Nicole have said in conjunction with my years of experience in this industry and the sort of claims and processes that have been encountered, as I'm sure, not only by myself, but by all managing agents, trustees present here today. So the big focus is on the compliance aspect relating to repairs and maintenance. It is paramount that if you become aware of a risk, of a mitigating risk that can impact on a potential claim, from a maintenance related perspective, it is best to address it and to address it rather than face the consequences of a repudiated claim or a challenge to a claim. So Mike covered extensively the roofs. I'm based in Johannesburg, and the storm water damages that occur on the roofs, particularly from the hail and the volume of water that where gutters cannot cope, and you have the backwash of water back into the buildings, into the ceilings, collapse of ceilings, etc. Those damages that Mark covered. If your roofs need attention, to the point that even the ridges, if there's evidence of cracks, plastering degradation, flashing degradation, membrane degradation, insurance does not look at that with a favorable eye, and they will repudiate a claim. And I'm talking from experience where I've had claims repudiated to that effect. So I really am pressing trustees, body corporates to invest the resources to keep the buildings dry. That's the best way to describe it. Keep them dry from all possible avenues of ingress, of water ingress. The roofs are one aspect. The other aspect is stormwater drainage. The changing weather patterns that we are experiencing and the high volumes of water in very heavy weather, where we can get 50, 100 millimeters of rain coming down in one cloudburst, that overwhelms the stormwater drainage systems. And you need to be cognizant of that. If you experience any flooding of units that are a result of stormwater installed stormwater capacity, unable to cope with the volume of water, look at your grids, look at your pipes, look at where you can augment them. Within my portfolio of schemes, I would say over 70% over the last few years, we've had to augment the stormwater drainage systems, increase the capacities, and it's not a case of excavating pipes and the like. It's more enlarging the size of the grids, the traps that can just draw additional water. The pipes should be more than sufficient to cope with it. I've even had one worst case scenario where one insurer basically stated that unless this measure was taken, they would not cover any flooding of units on of a specific block in that scheme. And that was a very interesting exercise. It was quite an investment of tens of thousands of rands throughout the whole scheme to augment it. And since then, we haven't had any risk or threat of flooding from stormwater events. Trees are another issue. If you've got beautiful trees but they pose a potential risk to falling over, collapse. There may be leaning, there may be evidence of a break or a crack in the main stems or branches. Take those trees out. And you're aware that it's a potential risk, a potential danger. Take them out. It's better to be cautious, err on the side of caution, than face the consequences of an event, adverse event. Also, a recent development that we have seen with insurers is lightning, and what lightning protection measures are being taken. So where you've got insurers prescribing, say, the installation of specific type of surge protection measures or earthing requirements, or lightning protection earthing requirements, particularly the most vulnerable areas being the security, the entrance guards, the security guards, where there's a lot of electronic equipment installed. Undertake and install those protective measures. Protect the cameras, protect the energizers, protect all other computers, monitoring systems that are there, because that is another risk, a mitigating risk that you should address. The third element of compliance, I just want to touch on, where Mike and I have had some interesting debates over the years, is the 3-year revaluation, the compulsory revaluation of insurance schemes. I trust that those are being done. Find a reputable company to do them. But a word of caution that I have found with these reports is that they are based on base costs. The valuators undertake them at base cost. They're not aware of what improvements have been done within the specific sections, within the specific units, which would escalate and elevate the value of the unit overall in relation to the replacement value of the scheme. Another barometer that I use is I look at new developments, comparable like for like as best as possible. A new development will show you and give you the full replacement cost, because that was built from ground zero. And that replacement value, my advice to the schemes is always load a percentage on whatever that report comes out at, and rest easy at night that you're protected. In other words, and it's not expensive on the premium overall. Be overinsured by a margin, then be underinsured. To be underinsured and have a claim where the average clause is invoked, that then puts a whole war at the feet of the trustees and the body corporate, because ultimately it's the trustees that are responsible for the insurance of the scheme, but ultimately the body corporate at the AGM, when it has to vote on the replacement value of the scheme, that's where the body corporate also then takes on some responsibility for the value of at what value the scheme is covered. So in very technical claims, and I'm talking about claims where not one flood event, as Mike used as example earlier, but a stormwater event where a widespread damage occurs to a scheme. Many units are damaged, many units are flooded, the resultant damages. The loss assessor will come in and from experience that I've had where I was personally flooded, I was a foot underwater and I had to move out to have my place redone. When he walked in, he said, "Oh, I can see you guys are well insured. There won't be a problem with the claim." True enough, there wasn't a problem with the claim, but where there was an element of a problem was with the boundary walls. And boundary walls are another big debate within policies. Boundary walls, singular brick boundary walls are not retaining walls. And those are looked upon by insurers with a different light. Retaining walls, which is the key thing, is you've got to prove to insurers that they've been built under current or compliant with current regulations. The wall may have been built 20, 30 years ago at the regulations prevailing at the time that rendered it compliant. But with regulations changing, you have a collapse of a retaining wall. I assure you the boundary wall will not, the retaining wall will not be covered by insurers. When you reconstruct, if you happen to be in a position where you have to reconstruct any retaining wall, do it properly with engineers, with engineers oversight, proper documentation, proper certificates, have that endorsed into the policy and be covered by be covered accordingly. Those are the sort of elements that one must be cognizant of and aware. Identify your risk. What are those mitigating circumstances and steps and measures that you need to take, and ensure that your policy is up to date and fully compliant that the scheme is fully compliant as best as possible to have claims on it. I'm just cognizant of the time, so I will stop there and allow for Q&A.
Fantastic. Thank you so much. Do we have any questions from the floor after these very insightful presentations? Anyone with, some real life examples after all the storms we've seen?
I think for me, I never know if it's wear and tear, or the word that Mike had used now, which I can't remember, or if it's just, if it is something bigger. So I always just throw the claim through insurance, rather let them tell me yes or no. Well, I lie. My first port of call is phone Mike. Should this be covered, and who is responsible for it? And then I go to the managing agent with my facts. But yeah, I always like to just post them in. I see Sandra's hand is up.
So yeah, just in the office, I just had to walk away from everyone. Hope you're all doing well. I think, Nicole, I follow the same logic. I'd rather just check with Mike before just sending their claims through to insurance, because I don't want there to increase the claims ratio and all of that. And I think we also, as trustees, look at what needs to be covered or what needs to be paid for. And I know it might not be the right approach, but we go, okay, it's 2,000 Rand. Rather pay for it yourself than put it through insurance. So we apply a logic like that. We've also seen a lot more rainfall in Joburg compared with other years. And that's something we're all going to have to look at as well and see, how do we maintain properly? How do we cater for that? And if there's any claim that we need to do, or any budget that we need to set aside for this, then we can do it. Yeah, that's me. Thank you.
Thanks, Sandra. Mike, coming off Sandra's question there, what happens if the trustees decide that the excess outweighs, or the cost of actually fixing it is the example that Sandra gave, 1,000 Rand more to pay for it cash than it would be to go through insurance. But as the owner, and it's my unit or whatever, I don't have the extra money lying around, I have the excess, or I could cover the excess, but then what would happen in a case like that in a body corporate?
A good question. And actually, there's two questions sort of rolled into one there, because I also want to speak to what you said. So I think it's on a case-to-case basis, and generally you should let people claim. So firstly, I don't think the body corporate or the trustee should stop an owner from claiming. Okay, so when it comes to common property, similarly. So owners are really tight out there. It wasn't so actually before COVID. That's what I'm noticing. Post-COVID, even 500 Rand is an issue. 200 Rand is an issue. So you've got to be mindful of that. Talk to your broker, or if we are your broker, and then we'll help you, take the reasonable test and see. Usually we say if the excess is 1,500 Rand and the claim is 1,550 Rand, obviously, it's really, you may be wasting time. But bear in mind too that you should be putting the claim in, because that's what you're paying the premium for on behalf of everybody. And if you're not claiming, you're actually doing, maybe the wrong thing. So yeah, speak to your broker who specializes in sectional title, hopefully, and they can help you with a reasonable test on that. So I'd say, definitely over 1,000 Rand claim. for common property items. When it comes to looking at what is and isn't a claim, and I think it's probably best that we reiterate this. I think when we're telling an owner, look in the booklet, this isn't really a claim. We're not declining the claim on behalf of the client, because you must never do that. Let the insurance company make that call. But you want to take down the expectation. People's expectation is that they're going to get paid out for their new kitchen. Meanwhile, they're not. And they get all excited, and then you have to tell them, no, it's been rejected. And if you use the word rejected, oh my goodness, that just brings the temperature up. So you want to sort of already start, you don't want to be all negative, but you want to say, look, from what we can see, this doesn't look like a claim, but we're going to put it in for you because, there we have it. We think that it's for the insurance company to do. Obviously, if it's clearly not a claim, if it's just mushrooms and trees growing out of the kitchen floor and it's been neglected completely, you can say, I mean, really, this is not an insurance claim, obviously. And us as a broker would help you make that call. But generally, don't reject a claim. There's also a myth that trustees actually approve claims. And I say you need to attest to the claims. Tony, I'm using an old banking word there. Remember when you had to attest documents? So I say rather attest it. So you are actually legalizing the document. So the claim, I'm talking about a manual form. I know we look at online stuff now a lot, but on a manual normal form, which applies electronically as well, you're not letting the owner just go bypass and do it, because actually they're not the insured, they're the witness. What you're doing is you're attesting to it. You're saying, listen, we don't agree with your claim, but we're signing it, legalizing your document. But we can add a note and say we don't agree with it, and we're telling the insurance company as trustees. So never stop a claim, let it flow, but make your remarks and sign it off by attesting. Yeah, I think that's enough on that.
I get so excited. Zelinda always says, the day that I don't learn anything in this field is the day she's retiring. And I get so excited when I can pinpoint like things that I have, like today I have learned that about the insurance. So thank you, Mike.
Yeah.
I see Paul has a question regards to storm damage. Severe hailstorm caused roof tiles to break. In my mind, this is an insurable event. What is your view, please?
Can I take that one? Tony?
Yes, please.
Tony,
Sorry.
I'm sure Tony
Auto.
Tony can comment as well.
Yep.
So if the hail, for example, or the storm causes the damage to the tiles, absolutely. The storm caused the damage. You just need the contractor to say, yeah, this is fresh damage. What ordinarily happens in Johannesburg is you have the storm and then everybody's claiming for old damage. Now that's naughty, and they can pick that up, the experts can pick that up pretty quickly. Obviously, if there's one or two tiles and the guys are there, they're not going to, get all nitpicky about it. But generally, yes, the broken tiles are covered. However, if the tiles, if the waterproofing has failed, or the coping on the top of the roof is all cracked and broken, it's a different story. Okay. Tony, you want to add to that?
I'm going to add a real spanner in the works here.
I knew you were pending to something.
And that's also related back to the days when solar power installations on roofs was a huge debate. Okay, so one aspect that I'm just putting it out there for yourselves to be aware. The hail damage caused by a storm, broken tiles, etc., is one element. If your roof should collapse and the roof trusses give way in the process, then we are looking at a Pandora's box, where insurers will look at, are the roof trusses compliant to current roof truss regulations? The roof truss regulations were changed about 10, 12 years ago. And if it would be mindful to get a roofing engineer in to check your roof trusses, if they need additional bracing, to render them compliant to current regulations. It is an investment that the body corporate will have to budget for, and it's a material cost. Again, I speak within the scheme where I stay. Our roof trusses are huge, and we need to do reinforcement of them. So that is another thing. Get a roof engineer out. Look at your roof trusses. If they need bracing to carry the loads, I'm not talking about solar power, but even the load of hail, which is what will bring them down, it will give you that protection. So yeah, please be cognizant of that. If you haven't experienced this, pray that you don't. But if you take the relative measures. Very costly exercise, but worthwhile.
Yeah, I'm going to add to that from a more technical point of view, for how the insurers view it. So you must always remember, if you look at Bruce's brochure that I had there, you can actually get it from there. But basically, if the cause, which it all comes down to the cause, if the cause of the damage was the hail itself, the proximate cause was the hail, yes. However, if the hail just triggered the other fault, then the other fault is actually the cause. In other words, if the roof was supposed to have handled that in the ordinary course, then it would have been a claim. But if the roof was defective, and that's the ultimate cause, in other words, if the roof was not defective, would the roof have stood? And that's always the big test. We've actually got that issue with carports at a scheme that Tony's also familiar with, where the carports were collapsed. Now the beam where the carports, the beam couldn't take the hail, and we've had two engineers look at it, and it was proven, unfortunately, that that was a defective design. Okay, and we were trying to push the agenda that actually the volume of hail caused the damage. But yeah, that argument didn't eventually wash. But we do make a lot of effort to prove that very point. So you've got to prove that the hail caused it, not the defect. Okay.
Fantastic. We have one last question from Edna. What about owners who consistently add to their SRV for improvement, but they're not actually making changes to the unit?
Hi, Edna. Nice to see you again today, or half see you, see your name anyway.
Hi, Mike.
It's almost fine. I mean, it is fine. The owner is slightly over-insuring, and it speaks to what Tony encourages. I think be slightly over-insured rather than be under-insured. I'm actually going around next week, I think it is, Candace, I think, to that scheme where, especially if it's a retirement village, folk don't know, and I go there and I help them just through the process. So just as a rule of thumb, we say, you know what, 100,000 Rand extra is probably going to cost you 10 Rand maximum per month, per 100,000. So, 10 Rand, why not? I actually do it in our office park. We're in a sectional title scheme office park. I mean, who knows what the extra cupboards and things. So we just add a couple of 100,000 Rand extra, 300,000 Rand extra, 30 Rand a month, just as an example. I wouldn't worry about 30,000 Rand because you've just put in a new something. On a 2 million Rand replacement value, 30,000 isn't going to make much impact. So I would work on 100,000 Rand above. If you want to put 50,000, it's fine. It depends. Again, I help a lot of folk, especially in retirement villages, they feel a little bit more comfort to have that extra 50,000 Rand, and it only costs them 5 Rand a month. Let them have it. It's really just for comfort. Edna, I could go on a bit longer, but I'll leave it at that.
Absolutely. I'm a big believer in better to have and not need than need and not have.
I was referring to 300,000 odd.
Sorry, Edna, I didn't get that. 300?
I was referring to 300,000 odd currently, the extra amount added.
Okay, so yes, it's costing them 30 Rand extra If it's giving them the comfort for the 30 Rand, it's fine. They're not going to get an extra 300,000 if their place burns down. They're still going to get maximum value in terms of what is the assessed loss. So they can't score out of it. It's really a safety net, and it's fine. I'm okay with that. It's small money. I will add though, when an amount, if you're concerned because you have renovated, and you feel that your place is well above replacement of the average in the scheme. You in your mind, you're thinking that, so you add more. Um, if the added value is more than 5% difference in what you were insured for, then it was a good thing. Okay, that's kind of the benchmark I work on. 5%, 5% difference to 10% difference range. Now you're starting to get into the territory that Tony is concerned about. Maybe there could be underinsurance.
Thank you, Mike.
Absolutely. All right, thank you, everyone. I think that brings us to a close. Just a reminder that the slides and recording will be available afterwards. And one final announcement, the information regulator have extended their deadline for comments on the code of conduct regarding gated access, which applies to community schemes, until the 29th of May. So anyone who has any comments on that, please make sure to contribute. I think it's always very important for those affected to comment on documents like these. Right. Thank you very much, everyone. Have a lovely day further. And thank you to Tony and Mike for joining us.